Everyone, this is Percy the Market Guru, aka Percy FS Guru. Welcome to another lesson lecture about candlesticks mastering. Welcome. I'm so excited about today's lecture. Before getting too much into talking, um, this is probably one of the most important lessons or lectures that you're gonna have to learn when coming to trading, because candlesticks are one of the most important things that you have to learn when coming to trading, because they are just a fraction of the whole chart. They're just fractions or fragments of the whole price movement, or if I could say. Um, for me personally, it helped me develop my trading and take my trading to a whole new level. The moment I started understanding candlesticks, from the high, open, close to the low, that information is very important, and that's one of the things that, like, when I started trading, I overlooked. I didn't really look too much into those things. I just looked at structure in terms of channels, highs, lows, put your vertical, horizontal lines wherever I could. But learning candlesticks, like learning a candlestick, understanding a candlestick, how the whole movement comes about, that helped me understand more of what I was doing, because the whole market is just a fraction of a candlestick. If you look at a monthly candlestick, it's just one candlestick with the high, opening, and the close, and the low. But if you look within that segment of a month, you'd see a lot happening within that candle, that monthly candle. So that helped me open up or remove this cloak that I had over me, in which I didn't understand or fully understand how the whole market moves, like those type of things. Those things are important, guys. I don't want to lie. Those things are important. They help my trading improve drastically. So without having to talk too much and getting too much into talking, don't forget to subscribe, like, and click that notification bell for whenever I upload a new video, you get notified. So let's get straight into the video. So we'll be looking at this price here, this price movement here. So that's what we'll be looking at. We'll be looking at a bullish reversal patterns. So today's lecture is going to be about candlesticks and reversal patterns, bullish and bearish reversal patterns. So this is what we're looking at right now. This is the price that we are looking at right now. So looking at this price, right, we can see that price came from up there. Let me get the path tool so that I can show you guys what is it that I am talking about. Where is this? Okay, here's the path tool. So the market came from up there, down here, reversed here, went down there, reversed here, came down here, came here, reversed a bit here, went up there, came down here, came up there. So I'm just showing you the direction of the market, where, like, I'm just showing you what's happening here. These white candles, those are reversals, the reversal candles, retracement basically from for this wave, for this wave here, for this bearish wave going down here. So these white candles are just reversals to the upside. So looking at this data here, right? Looking at this data here, if you look closely here, this is a reversal pattern. Some they call it head and shoulder, some call it Quasimodo, but it's a reversal pattern. Either way, whatever you call it, you don't change shape, or you don't change how it looks just because you call it something else. Or just because you call it something else, it doesn't mean that you don't hold or whatsoever. It's the same thing. We're looking at the same thing. So even if I didn't know what it's called, it still works either way. So this is a reversal pattern here. So I'm gonna start it from here, from this leg here. From this leg here, on these three candles here that are these three red candles in a line, these three bearish red candles. So if you look from here, right, the market trades down, and makes a reversal, then trades down below the reversal, and then goes up, breaking this reversal candle here and closing above it, consolidates a bit, make a opposite red candle, then pushes up above the that small little consolidation there. So for me, this is a sell. This is a buy setup. This is a buy setup for me. So from this breakout of this candle here, this white candle here, the moment it closes above this consolidation here, I take it as a buy. Why? Okay. Since let me make let me find the path to. So the market came from down up here, right? Came from up there to down here. Small retracement, breaking below the previous low here, and then breaking above, making a tiny retracement here, and then breaking with this candle and closing above it. So for me, this is a bullish reversal pattern. It's a bullish reversal pattern. So if I see this pattern, my entries are gonna be the moment this white candle closes here. The moment this white candle closes here, this is my entry. I'm either gonna put my entry here, which means the moment it closes, I'm gonna buy at this area here. Okay, let me do this so that I move this. Let me squeeze it a bit. So there's my entry there. This is where I'm gonna buy. I'm gonna buy here, which means my entry is gonna be around here. Or if I feel like this candle is a bit too long with the breakout, I'm gonna put my buy limit below the reversal of the opposite direction of the breakout, which is the breakout is to the upside. So the first opposite candle that appears after the breakout, the first opposite candle that appears and gets broken above, I'm gonna put the stop limit, buy limit below that that low. So I can either put a buy limit, I can either put a buy limit, I can either put a buy limit here below this low, or I can execute an entry here. Here after the breakout. This is a second breakout basically. The first breakout was here, breakout structure with this candle, with this white candle, breakout structure, breaks and closes above this high here. And then after breaking this high and closing above, I basically wait for the first opposing candle to the breakout. So after this breakout, this W formation here. After the first breakout, I wait for the first opposing candle to appear, which is this red candle here. Then I wait for another breakout above that candle. Once the candle breaks and closes above, I take it as a buy signal because it was already breaking structure twice. So it's a confirmation for me. Because usually, if let's say it breaks here, the market tends to consolidate around this region and then it drops to the downside, continuing with the sell. So for me, this is like a confirmation for me to say that the market is going to the upside. So I can either buy here with the market execution, or I can put a buy limit here below the first opposing candle after the second breakout. Put my buy limit here and then all the way to the upside. I'm not going to talk about management or risk management whatsoever. I'm just showing you the patterns in this lecture. So as you can see here, if I came in here, the market would have gone. But if let's say I entered here, for example, obviously my stop loss was going to be below this low here. If I put my buy limit here, my stop loss is going to be below this low here. So look at how the market, after breaking out of this structure here, some they call it order block, some call it whatever, but it's the same candle. Whatever you call it, market always, not always, but like most of the time, it comes back to this this price action here, and it kind of acts off it, and then it bounces off, and then it moves in that direction. So after, if I entered here, it was gonna be a profit, come back down, be a bit of a loss. If I put my buy limit here, I was probably gonna be in depending on the spread. If the spread was big, I wasn't gonna be filled in here, but maybe an execution, manual execution would have helped. So I would have entered around here or either here, and then stop loss below here, and then the rest is history. As you can see, the market just kept going and going and going and going, even though it was like consolidating for a while, but it just kept going. So another bullish reversal pattern that I want to show you is this one here as well. This one here as well. I want you guys to understand this. I want you guys to see what it is that I'm talking about so that you can see how beneficial learning this reversal pattern is and how it can improve your trading. So here's another bullish reversal pattern. Let me find the path tool again. Where's the path tool? So the market came from up there, right? Came up there, came down, bouncing around here, making lower lows. So from this point here, came here, down there, went up there, breaking with this candle here, this white candle here, breaking this high here, breaking this high here, breaking it. Or you can take this one as well. Usually I like to use I like to use this V formation here, like the V, see the V formation high. So which means a low just before this low here. So these two lows, when they connect, they make this a high here. So this high, usually I refer of this one. This one I would, but I like using this one. The reason for that is because the price was violated here by this low here. When the price came down, it violated the low and then it went above, breaking this. So this is a breakout structure with this candle here. So the moment that happened, it's a signal for me to look for buy signals. I don't enter the market yet. I look for buy signals, which means what do I do after this violation? I wait for the first opposing candle. So sometimes it's not just one candle. Sometimes it's multiple candles. Sometimes it's a multiple candles. So if it's multiple candles, I'm gonna take all of this as one basically. So which means the candle that breaks above, which is this one here, the candle that breaks above and closes above, the candle that closes above this retracement here, that closes above, which is which one? Which is this one here. I'm not going to take this one because this one, it's within this range here, this reversal here. So it has to break above a certain range and close above that range. Then I take it as another buy signal. But in this case here, when this is a breakout, you can see the distance from down here to up here. It's a huge distance. So I cannot enter a trade here. I can't enter a trade here if the distance is so long. I have to manage my risk. So instead of entering here, I'll put my buy limit here. Let me just put a horizontal line. I'll put my buy limit just below this reversal here. So the moment it reverses and then it breaks out again, I'll put my buy limit. Reason for that is because this is a huge price movement. If, for example, let's say this setup happened around here or below this yellow line here, I would have taken a buy or an execution buy instead of waiting with the buy limit. So it also goes with you in terms of how are you willing to risk or how much you're willing to risk, and also goes with the time as well, time of day and all those type of things. Because when everything comes together, it all makes sense. It all makes sense. You don't always be that perfect trade that you get. It's how you manage, consistency as well, being patient for that setup that you're looking for as well. So in this case, I would put my buy limit here. Reason for that is because this breakout is too far away from, if I say I put my stop loss here, it's too far for me. I want something that's a bit closer, just above the breakout here. If it's up just above the breakout here, I'll probably enter it here, but also the time of the day, so I wasn't really comfortable, or I wouldn't be comfortable with entering a trade there. Rather, somewhere along here, knowing that the stop loss is going to be a tight one, which is a good thing. So my buy limit will be here. Then let's do this, which means I was going to get filled up, and then the rest is history. So this is a very powerful strategy or reversal pattern. It's very powerful. So it's the same as a head and shoulder. It's a head and shoulder. It's a Quasimodo. You can call it whatever. It's the same thing. It's the same thing. You can call it whatever name. You can call it. It's the same thing. What you see is what I see. So if you see this pattern on your chart, it means I'm also looking at the same pattern on your chart. So you can call it whatever. I can call it whatever. It will do the same thing. You don't change just because you're calling it a different name. Okay. So now I'm gonna look at the bearish reversal patterns. Now I'm going to be looking at the bearish reversal patterns. So here's the bearish reversal patterns. This was I think that this was a news event, if I remember correctly, on what day was it? Maybe Friday. I think it was Friday, if I'm not mistaken. So from this price here, the market comes here, goes all the way up there, making this V formation. You see this V formation here, and then it breaks down aggressively. And then it makes it retracement. This is the first breakout, by the way. First breakout, it makes a retracement, and then it plays around. I'm not gonna get involved until the second breakout comes in, which comes in here on this candle here. Breakouts, so just small retracement, then a breakout to the downside. So here, same thing. After this breakout here, this is the second breakout. The first one is this one, then the retracement, opposite candle going in the opposite direction of the breakout, which is going down, opposite candles going up, then it plays around, then it breaks out again, second breakup. This is where breakout, second breakout. This is where I was gonna enter with a sell, or if I feel like this is a bit too far in terms of risk, I'm gonna put a sell limit above this. I'll put a sell limit above this high here. So I was gonna put a put a line, trend line there. Put a sell limit above this high here, and look at the way the market comes back and just tips or just purges above this high here, and then from there just goes down, just goes down. Similar thing happening here, just to show you what's going on. The reversal patterns come in different ways. There are those ones that are like common, and then there are those ones that are like happen in a trend. I would say those ones are like the uncommon ones, because we usually look at reversal patterns that are like at the far end of the trend. In most cases, like a head and shoulder pattern. But there are those reversal continuation patterns, which is the same thing if you look at it. For example, if you look at this price from here, right? From here, it goes here, it reverses here, and then it gets here. Okay, let me do this. Let me delete this. So that I keep that V formation, and so that you guys can see what is it that I'm trying to let you guys focus on. So we see this is retracing, right? Just right before the sell limit here on this line here. So the market makes this, right? This retracement here, breaks, taps into it, right? So if you want to sell this should be another confirmation for you to get involved in the market. How? It gets into it purges above the sell limit, right? So you can either sell it here, put your stop loss above that high up there, or you can wait for another break of this structure here. So we have a V formation here, and then it plays around here, breaks here, breaks the structure here for the first time here with this candle, this red candle here, breaks it, and then the first opposing candle after the breakout. It can either be one candle or it can be candles. It can be one or two or three, it can be multiple candles. It doesn't have to be one all the time. So the first opposing candle, which is this one, and then another breakout, which is what? Our second breakout. So same as what happened up here. Same as what happened up here. The same thing. So the V formation starts here, makes a high, breaks below with this red candle here, then the first opposing candle, retracement, then the second breakout. So I can either enter a sell here, or I could put a sell limit here. Let me put a sell limit there. I think putting a sell limit is the safest thing, because now it helps you manage your risk even better. than manual execution, and then your stop loss is going to be where? Going to be above the setup, going to be above the setup in which you are looking at, which is this one. So you could have entered here, put a stop loss above this high here, and then you wait for another setup to form, breakout, and then you enter again, put a sell limit here, and then put here. So if you already entered here, you can enter here again and move your stop loss from up there just above this high here, and have your second entry here. Just look at the way the market came close to tapping into this. Just came close enough, didn't really push you in here, so you'd have missed this one. But if you had an execution here, you'd have been in the trade either way. So that's how I trade reversal patterns. Either it's bullish, bearish. That's what I always look at whenever I'm trading these patterns. I always look out for that second breakout, because usually when I used to only trade one breakout, like the first breakout, I'll get into the trade, some will be profits, sometimes I'll get into it and then it breaks and then it reverses immediately, and then I'll lose a trade, and I'll be like, why? It's because waiting for that second breakout always helps. Not always does the market come back to that second breakout. Sometimes it breaks out on the first one and then it goes. Sometimes it goes on the second one, sometimes it retraces, sometimes it doesn't. So the market is very dynamic. It's not always going to do exactly the same thing, but there are patterns that it shows us with, it helps us identify those patterns, and helps us, shows us how we can get involved. You just gotta choose how you're gonna involve yourself within the market. You're not always gonna get a perfect setup. Sometimes it's gonna be a bit tricky. Sometimes you're gonna have to sit and wait for that perfect setup for you to form, and then that's how you become more profitable. It's being consistent in one thing rather than multiple things, because you cannot be consistent if you are looking at, or you're trading 3, 5, 10 different patterns. You can't, because how do you find consistency in something, in repeating something that's different? It doesn't make sense. You have to repeat exactly the same thing in order to find consistency, which means if you set your rules in a certain way, that I only execute, or I only put buy limits, execute or buy limit, unless you've done enough tests with your strategy that you can see that doing both gives you close to similar results, or you've learned so much in terms of how to use a strategy, you know how to leverage it basically. So without making this video too long, thank you for watching. Don't forget to subscribe, like, and click the notification bell. See you guys next time. Thank you. Bye.